Welcome to How I Raised It, the podcast that goes behind the scenes with entrepreneurs who've raised capital. We uncover the tips, tricks, and techniques they use to get investors to write a check. Strap in and turn it up.
Hi, welcome to another episode of How I Raised It, produced by Foundersuite.com. Today I have Jonathan Siddharth of Turing.com coming to us from Menlo Park. How's your day going?
Good. Thanks for having me, Nathan.
My pleasure. Great to have you. I'm excited to hear what Turing is all about. So let's start with that. What do you guys do?
Turing is a platform that lets companies hire pre-vetted remote developers at the touch of a button. So we live in an era today where all work is remote work, all hiring is remote hiring, and it almost sounds unbelievable to think that a company, when given a choice, do you want to hire the best talent in the world, or do you want to hire the best talent that happens to live near your office? But if you ask the question, why isn't every company run as a remote-first company, there are three primary obstacles that stand in the way.
Yep.
It's really hard to find Silicon Valley caliber talent that's remote. It's really hard to evaluate talent that's remote. Like, how do you evaluate a developer from Brazil when you can't recognize the schools they went to or places they worked? And third, after you found that perfect developer, how do you ensure you have a high quality collaboration when you're operating as a distributed team?
Sure.
That's why we built Turing.
Okay. So what's the secret sauce, though? I'm sure, like many startup founders, probably a third of my inbox are cold emails from development shops all over the world, all claiming to have, exceptional engineers at low cost. So what's the sort of secret sauce that puts you guys apart from that?
Yeah. So what's the secret sauce at Turing is that to really solve this problem, you need to have infrastructure that can evaluate a lot of developers at scale. So we built an automated sourcing engine, an automated vetting engine, and an automated matching engine that lets us evaluate a lot of developers at scale. If you look at a dev shop, let's say there's a dev shop in India, let's pick, let's say a dev shop in Mumbai. That dev shop is going to be able to hire developers from the Mumbai area who are probably on staff. Mm-hmm. So you kind of traded off looking in one zip code to looking in two. Sure. Whereas at Turing, we have 180,000 developers signed up from 10,000 different cities. So we are casting a very wide net, and we have the software to process a lot of developers scalably. So the secret to finding a needle in a haystack is having a good algorithm to process through a very large haystack.
That's very interesting. Yeah. Couple additional questions on that. So how do you attract 180,000 developers? You're building a market in many cases, and there's always the cold start issue with marketplaces. How did you lure in 180,000 developers to apply and go through your hoops to prove they are the top 1%?
So we are fortunate in that Turing has really high quality customers, and that serves as a good carrot to have developers on board. And we've also built software that can identify developers at scale from a lot of these labor arbitrage centers, particularly parts of South America, parts of Africa, parts of Southeast Asia, parts of Eastern Europe, parts of India, parts of China. So part of our secret sauce is our engine to detect these developers at scale and automatically evaluate them. So it's a lot of data science that goes into computing, making sure we are collecting the right signals as a developer is going through the flow, and back-propagating results that we get based on which of those signals correlate with success with a customer, success with an interview, and using that to further refine that funnel.
Makes sense. Yeah, that's cool. You probably don't want to give away too much of your secret sauce, but can you talk about what's sort of in that evaluation at scale? Is it a lot of code tests or examining previous sample code, like, challenges, or what kind of stuff is involved in that?
So we evaluate developers along three primary dimensions. The first dimension is for a variety of job types, like front end, back end, mobile, AI, data science, DevOps, etc. The second is specific tech stacks. So for example, if it's a full stack developer, maybe the front end framework was React, the back end framework was Node, the database technology was maybe PostgreSQL. And you also want to make sure you're evaluating developers for computer science foundations, like data structures, algorithms, etc. So that's the second dimension, tech stacks.
Yep.
The third dimension is engineering levels. So our VP of engineering used to be an engineering manager at Facebook, and we've defined an engineering ladder similar to most Silicon Valley companies. So we have individual contributor level 3, individual contributor level 4, tech lead manager, etc.
Yep.
And we've come up with an automated vetting process through a series of automated coding tests, automated quizzes that give us really granular data. That our vetting is also adaptive, where the system dynamically adapts to the candidate's level of seniority so that the tests become, they increase in difficulty or lower in difficulty depending on how the system assesses the developer.
Yep.
And it takes developers like roughly 4 to 6 hours to go through our vetting engine. And this is a fully Turing designed system that outputs what I would call a deep developer profile. So much like Facebook and Google build user profiles, Turing builds these rich, high-dimensional vector representations of a developer's strengths and areas for improvement, areas for growth. And we use that to find amazing developers and match them with the right companies. We are also the first and only platform that evaluates developers for non-technical behavioral signals that are important for remote work. Soft skills around communication, collaboration, level setting expectations, being able to proactively unblock yourself, etc.
That's interesting. Sure. And does that also include things like language? I mean, or is everyone speaking English of these engineers, or is there, how do you sort of arbitrage that? Because you're arbitraging these talent pools in non-English speaking areas. So how does that work?
So our vetting covers English communication skill as well. And when we say English, we actually decompose that into a few things. For an engineer, so there's one part which is, comprehension. Are you able to have a high bandwidth meeting, a high bandwidth conversation? Where if a lot of people are brainstorming a solution, are you going to be able to participate and contribute? So that's one. And then, of course, there is written communication, which is very important, particularly for engineering. Most of the communication is written. You're probably communicating via Slack, GitHub, Asana, Jira, etc. And then, of course, there's spoken communication. You want to make sure that, you don't have to speak perfect English, but you want to make sure that your English is understood.
Sure. Gotcha. Okay. Very interesting. Couple more questions and let's get into the fundraising piece. But the business model, are you simply a matchmaking platform, or are startups or companies hiring Turing as a company, as a development shop? How does that work?
So our market hypothesis is that for most tech companies, 20 to 30% of their engineering headcount is better served by having long-term, full-time contractors, 20 to 30%.
Yep.
And when I say long-term, I mean 6 to 12 months, maybe a little more than 12 months. And when I say full-time, I mean these are developers working 40 hours a week, 173 hours a month, roughly. So they're not like moonlighting or doing multiple other things.
Yep.
So our customers use Turing for those needs, that 20 to 30% of their, I would say, elastic team needs. And usually our customers come to us because they need a developer like 2 weeks ago. So they come, they value this, which is a common occurrence in most fast-scaling companies. And maybe it's something where there's a high cost for you if this product doesn't ship this month versus or this quarter versus if it gets delayed. Maybe you're going to miss a key market window. So the main value proposition for our customers is helping them ship products faster and meeting their market needs faster so they don't get left behind. So they work with us. So customers pay Turing, and then Turing pays the developers portion. So it is a tech-enabled staffing company in a sense.
Yep.
And Turing is creating this new category that we call Talent Cloud, which is we are putting together this distributed team of developers that's globally distributed, except that it's sourced by software, vetted by software, matched by software, and then managed by software. So we build tools that we have developers use once they are working with a customer that controls for communication, security, and it gives the customers visibility into the remote engineers' work like never before.
Very cool. It sounds super relevant, super good. We've been using long-term, full-time offshore contractors since day one at Foundersuite, and it's been a key to our success. Like, it's really worked well. I never would have thought I'd have, a distributed engineering team all over the world, but it's been actually really awesome. So I'm, you're preaching to a choir of one, but I love the model already. Very cool. And, it sounds with that many developers, it's truly global, but are you seeing any pockets? Like, is it, skewed towards India, Pakistan, or is it really equally spread out in terms of your talent pool?
So South America, Africa, Southeast Asia, parts of India, parts of China, parts of Eastern Europe are all very, very rich in amazing talent that lacks opportunity locally.
Sure.
Mm-hmm. And I think there are great people all over the world. Talent truly is universal, but opportunity is not. Mm-hmm. If you were fortunate enough to live in the Bay Area, you have access to all of these opportunities. But if you were born somewhere else, like the opportunity pool near where you live might not be as rich. And Turing's mission is to bridge that divide. Let's bridge the talent and opportunity gap, and let's level the playing field for amazing people to level up and participate in building the tech industry.
Totally makes sense. I like that phrase. Talent is universal. Opportunity is not. You don't have to answer this. You can skip this question, but where would you say of all these different regions or across the globe is the greatest arbitrage opportunity versus talent level versus what you have to pay? Is there any real disparities? Yeah.
So I would say, all of the places that I mentioned have good arbitrage potential. Yeah. But you kind of have to go a little bit deeper. Like, for example, even in India, and that's why I said parts of India, there is no arbitrage potential in Bangalore. Like in Bangalore, a Silicon Valley caliber developer is already working at a Silicon Valley caliber company, right? Yep. But there are plenty of other places in India where there is talent that's untapped. One area that I have been impressed by a lot in the last couple of years is definitely Africa, which is new, and I think there's a lot of great people there that are now coming into the tech industry. One trend that all of this is writing is the democratization of a computer science education. It used to be the case that if you wanted to get a high quality software education, you had to go to maybe one of 20 schools. Now that's no longer the case. Like, I think MOOCs like Coursera, Udacity, Udemy, coding camps like Lambda School have sort of democratized access to an education. Like, all you need is a desire to learn and an internet connection, and I think you can be in good shape. We see some great people on Turing who don't have a college degree, who are self-educated, who are just hackers, like self-taught programmers who love tinkering, and they make amazing software engineers.
Very interesting. All right, maybe last business related question, like how does the pricing compare? You're getting the top 1%, you're probably selling to maybe Silicon Valley firms, or maybe not. Is pricing, competitive, or are you priced at a premium because you've got really a premium product? Yeah.
Yeah. So so our pricing is extremely competitive relative to hiring locally.
Sure.
For that same, if you are restricting your hiring radius to 20 miles from company headquarters, like Turing will sort of blow that out of the water in terms of the value that you get. Which is why we're growing as fast as we are. It's hard to answer pricing in a vacuum, since it depends on the seniority level of the engineer. It depends on the kind of tech profile that you're looking for. For example, the cost of working with a computer vision engineer who knows how to build an image segmentation model in TensorFlow is different from, let's say, an amazing Vue.js developer, right? Different skill sets. It's a function of sort of demand, supply, how hard it is to find that tool. So it depends on a few things. But the short story is, for customers on Turing, they typically end up, I would say, like I calculated this a while back. Like if a startup completely switches over to Turing for their full engineering needs, I think it's easily possible to double your runway, maybe triple, given the amount of spend that most companies have.
That's a great sales pitch right there, because it turns it into saving you 30% or whatever into an extra 18 months, right, of life. That's a good framing. Very cool. I had some other question that I've already forgotten. Oh yeah, do you guys also have product managers and sort of the, which I always think of as the intermediary between the business team and engineering, or just engineers?
Just engineers. So we made the decision that we're going to vertically focus on just software engineers. So Turing is just about software engineers. There's nobody else. So when you're working with a Turing engineer, the engineer reports directly to your team, your engineering manager. They're on your Jira, your GitHub, your Slack. Turing has software that the engineer uses that makes communication easy, makes everything secure, makes everything streamlined, but they are your distributed team.
Yeah. Okay, cool. All right, let's get into the theme of this show, which is raising capital. So how much have you guys raised, and over how many rounds?
So we've raised a seed round of about 15 million, which was recently covered by TechCrunch. And the round was raised from Foundation Capital, Facebook's first CTO, Adam D'Angelo, the founder of Upwork, and a lot of execs from Google, Facebook, Apple, Amazon, Twitter, etc. Like people who face the hiring pinch in the Bay Area. We also have some other global investors, like who help us get an edge in global markets, like Eastern Europe, South America, parts of Asia, etc.
Interesting. Now I'm looking at LinkedIn. You were an EIR at Foundation, is that correct? And maybe what does that mean? And was this a spin out from your time as an EIR? What's the story there?
Yeah. So my co-founder Vijay and I are repeat founders, and our last company that we started when we were at grad school at Stanford had a successful acquisition a couple of years back. And after that, we took 2017 off and took a little bit of time to recharge. And at that time, we were invited to be entrepreneurs in residence at Foundation Capital, where we worked closely with Ashu Garg, one of the general partners there. And at that time, we were not quite sure what we wanted to do next. There were two ideas that we had in mind. Turing was one of those ideas. And Ashu and the team at Foundation Capital were very interested. I I had known Foundation Capital in the past because I was a machine learning scientist at PowerSet, which was a Foundation Capital portfolio company that Microsoft.
Okay. Uh-huh.
So I was known to the firm through another channel as well, and we spent a few months like in Foundation's offices building the early version of what became Turing, speaking with a lot of customers, potential customers, and a big part of that phase was thinking, what is an idea that we want to commit like the next decade or more toward?
Mm-hmm. Yep. And
it was very clear to me that one of the main reasons our last company succeeded was the fact that we ran as a remote distributed team with amazing people from Ukraine, from Poland, from China, and so on. And that was like, I would say, when people ask why that company succeeded, I would say two reasons. One is luck and good timing, things that you can't control. And the second is this great team. So it was very clear to me that whatever company we start next, the first thing we were going to do is figure out a way to, again, hire Silicon Valley caliber talent, but from these remote geographies. And this was 2 years ago, I think about 2.5 years ago, when a lot of VCs would sort of be very skeptical of the idea that you can work successfully as a team when you're not under one roof.
Sure.
There were many people who didn't think remote work could work. I think the pandemic has sort of forced us into an experiment with distributed teams and remote work, and now I think people are realizing that it does work.
Yeah.
And, at least for software engineering. I think for software engineering, since most of the communication is already asynchronous, already
right,
somewhat remote, I think it works.
Yeah, I was going to ask about that. Actually, has COVID-19 in the last, what month are we in here? 9 months, whatever it's been. Has it been a true boon for your business, a true boost for it, or how has it affected you guys? It seems like it would be, but yeah.
Yeah, I mean, it's been a big accelerator. Like I would say, so we went GA to general availability in August 2019.
Okay.
And then we've grown about 17x in revenues since then.
Oh.
And to be honest, like I would say, like in March or so, it was not clear to me how this would pan out when we all went into lockdown. And I was very concerned for the health of a lot of our customers with the sales process completely shut down. And to be fair, at that time, when we looked at our customer profile, a lot of our smaller customers did not make it, unfortunately. Like
interesting.
COVID did negatively impact a lot of businesses that otherwise would have probably been successful or had a better chance of being successful. But then what happened was these smaller companies started going away, and they kept getting replaced by larger companies that were either robust or anti-fragile to remote work.
Yep.
When I say robust, I mean that they were strong enough to weather the storm because they are big enough and they've raised enough capital and so on. And then there are plenty of companies that thrive in this situation. Like every 2 weeks, I hear about some amazing virtual events. Startup or company, for example.
Yeah.
And I think like there was that period of adaptation, which definitely was concerning for me, like what would happen to our customers, like at least some of our smaller customers. But I think by and large, I think a lot of people made the shift.
Sure, of course. Are you seeing any signals lately? We're recording this mid-November. Any current signals? It's such an interesting time because you've got vaccine data being announced, which of course is driving the stock market, yet we're also entering this probably additional lockdown or second wave lockdown. So like you're almost a canary in the coal mine. Are you seeing hiring still be strong, or are people getting nervous again? If you can share.
Yeah. I mean, we've seen hiring stay strong, but then again, it used to be the case that remote hiring was like a small part of hiring, right?
Yeah.
Now all hiring is remote hiring. And from Turing's perspective, like the size of our market opportunity just kind of completely expanded.
Sure.
Like it's not just, hey, are you open to remote developers? Now it's like anyone who's hiring developers is hiring them remotely in a touchless fashion, right? So so this contactless hiring is kind of what's happening right now. So from our side, it's still, everything is still growing.
Yeah.
But on a macro level, it's possible that things are slow. Typically, we do see a little bit of a slowdown in Q4. Around Thanksgiving and the Christmas holidays, when maybe fewer companies are onboarding new engineers.
Sure. Yeah, interesting. Okay, I want to go back to raising capital. Maybe just for my own curiosity, what does it mean to be an EIR, entrepreneur in residence, at a venture fund? Does that mean you're on salary there, coming up with ideas, and then they get first rights to invest if you spin out something cool, or what does it mean?
So it depends on the firm. Like different firms have different ways of doing it. So from the standpoint of many firms, it's usually done for two reasons. Either it's a founder they want to back and they want to get in there early to preempt the next round. So in our case, Foundation Capital offered to invest even before we'd started the company. Like we had these two ideas that we're pursuing, but even prior to that. But we wanted to take our time to do a little more research before embarking on that. So VC firms do that for one reason, which is, hey, is this a company and an entrepreneur that we want to back, that we want to have first dibs on, in a sense. So that's one. The other path is if it's somebody that they feel they want to hire as into the firm as part of the investing team. So usually it's for one of those. And typically when you start, like you're pretty upfront about what the goal is. I was very clear at that time, at least my goal was not to become a VC. My goal was I was very clear about what I wanted to do next, which was start my next company. And I was going to do it again with my same co-founder from my last company. And it was very clear what we were going to do. So it was just a process of how efficiently can you converge. And the benefit of being with a VC firm like Foundation Capital was I had access to a ton of companies that I could speak with who were potential customers of Turing. So for Turing and the other idea I considered, if I were evaluating it myself, it would have taken me a much longer to collect the same amount of signal. So here it was just the Rolodex was just richer. And plus it's nice to have, like prior to that I was working from home, and it's nice this sounds a little bit odd, but it felt nice at that time to have a different sort of work environment to have a little more structure. Sure.
Are you, as the EIR, are you required or obligated to let them fund you once you spin it out, or is it more of an informal agreement? How does that work? Is there any contractual nature to it that they get right of first refusal?
I would say it's a handshake. It's a handshake. There's no sort of written thing. It's a handshake. I mean, it'll be very odd if you did that, but then you went with someone else. Like it's probably not done. But there's many EIRs in many firms who don't end up starting a company, or who don't end up. So it's both ways. It's not a given that in every EIR role, like you are tinkering on an idea and that idea manages to excite enough of the critical mass at the firm for them to invest in. So the firm may pass, you may raise from somebody else. But I've realized from my experience as an entrepreneur who works with VCs and has been for a while, these are all like long games and long relationships. Like at the end of the day, like everyone sort of like relationships matter, and these are all soft agreements that get kept.
Sure. Good. Okay, I just want to get into a little more weeds on the actual, maybe let's go to the seed round, the very first initial seed round. I'm seeing, 500 startups. Did you go through the accelerator program, or did they just come in as investor? I guess same question with plug and play. How'd you put that round together? Some interesting names on there. Any stories of actually, raising that initial seed round?
So that initial seed round I raised on a safe with different valuation caps, different terms on an ongoing basis.
Okay.
So, I mean, we had plenty of investors, 500 startups, plug and play, many others. We did not go through any accelerator.
Okay.
And my approach was a little bit unique for our seed round. So for my last company, my approach was to operate in a serial fashion, build company, and when you're sort of close to the end of your runway, maybe you have enough runway, maybe for 8 months, something like that, switch to fundraising mode, and then you try to raise, and then if that didn't go per plan, then you would look at maybe strategic options and stuff like that. For my second company, I made a conscious decision to not operate in serial mode, but to operate in parallel mode. So instead of spending 100% of my time on company building and then switching 100% to fundraising, my approach is to spend roughly, I would say, 80 to 85% of my time on company building all the time. And have a small stream of investor conversations that I have. The benefit of that is if you have high quality investors that you're able to meet and chat with, you're constantly calibrating to their feedback, any guidance that they have, and it helps de-risk your next round. You're never going to be surprised. One of the biggest mistakes I made in my last company at certain points was when I focused 100% on just company building, company execution. Yeah. Sometimes when I would go speak with investors, I would be a little bit surprised about the kind of metrics, the kind of benchmarks that they would expect. The way I was always calibrated with the market. And the way I think about it is when you're building a product, so a company has two customers. One is customers for your product, and the second is customers for your stock. And the way you improve sort of the experience for customers of your product is by constant iteration, collecting data, and readjusting. And likewise, for customers of your stock, you want to be talking to the right people, collecting their insights, and readjusting and recalibrating. So you're never surprised.
That's great. That's great. And so, okay, so let's unpack that a little bit, to use one of these buzzwords. 20%-ish of your time, you're sort of always just chatting and communicating with investors. I guess that's both, prospective investors for a next round, as well as people you're kind of bringing along, or how does it play out in a day-to-day thing? Are you just having ongoing coffees and chats and Zooms with people that you're sort of interested in working with, or what? You tell me.
Yeah, I mean, I would say it's probably closer to 15%, and there's definitely maybe a little bit of spikes here and there. Sure. It's both. It's both people who could be good seed investors at that stage, and it's people who could be good investors for your next round. And these are more, if I'm speaking with someone, I'm speaking with someone because it's someone whose insights I value. Very seldom am I speaking with an investor where it's because we need to raise money or something like that. It's because I like this person's expertise and I want to hear what they have to say about Turing's business. For me, a good measure of a meeting is what did it change your mind on, or at least give you food for thought on? Did it make you think about something slightly differently? Did it make you think about a new metric or a new area to focus on? Did it make you think about a new risk you were not aware of that you have to think about de-risking? Sure. So I think about, I like working with investors where it's somebody who I would have loved to hire, but now at least I have the benefit of their expertise helping the company, and I'm happy to make room for them in the round if that's what it takes.
Yeah, that's interesting. That's a great lens. You know, do you want to hire these people, or would you love to hire them? That's interesting.
Yep.
Okay,
and
good.
Investors have different superpowers. Like if you can usually, that's another thing that I try to find out. It's a little bit like, you know, like assembling like the cast of the Avengers. Like at Turing's Investors, like every investor I speak with, I know what their superpower is. So when I have a problem I'm looking to solve or a challenge in one specific area, I know who to go to for what.
Yeah. Mm-hmm. That's great. That's great. Do you have any way of formally tracking, you know, the different, I'm almost picturing like a grid of superpowers, and you've got all the different little VC icons you're moving around. I don't know. Do you have any actual way of tracking that, or is it more just up in your brain? Yeah.
So I have, so some of the people who know me sort of joke that I have spreadsheets for everything, and I have spreadsheets on people, and usually the people that I work with are in multiple spreadsheets, and so I do have a system for organizing information from meetings, information from people, so that like I can triage that the right way. Like for example, if I'm meeting with an investor, one of the things I track is what are some areas that this person can help us with? Like what unfair edge do we get if we let this person invest?
Yeah, that's great.
Like yeah.
Awesome. I'm just taking notes. Perfect. Very cool. All right. Well, any notable stories, or did anything change when you went on to, I guess, you did 3 rounds or 2 rounds total? 2 rounds
so
total,
it's
right?
Continuous sort of it's one seed round, but in different valuation caps. I'm sorry, what was the question?
Actually, I want to talk about that for a minute. So, and you mentioned that you were sort of, you know, continuously raising using safes and different valuation caps. Tell us how that works in practical terms. Do you start out saying this, you know, I'm raising X amount on this safe with this valuation cap, and then when you fill that one up, you sort of move on to the next one, or you describe how it actually works? Yeah.
So firstly, I would recommend for everyone who's looking to fundraise to consider using a safe and not a priced round. Safes are just easy, fast, easy to close, to keep going in a rolling fashion versus a priced round. And in a safe, the more founder-friendly safe is a YC pre-money safe, not the post-money safe. So look that up if you're not sure about what they are. There are some good YouTube videos on those. So you should be using a pre-money safe, not a post-money safe. By default, on YC, you'll probably see post-money safes. So use a pre-money safe. That's more founder-friendly. And the way to do this is just in an iterative way. As you keep making progress, you keep increasing your valuation cap. You can obviously test. You can keep it at a valuation cap, and if you're finding that the market doesn't bear that particular valuation cap, you readjust and move on. Yeah. In general, I would say always start with a smaller tranche, like the most minimum that you need, and then increase it as you need to. Psychologically, people, like a round feels more empty if you have like a big amount that you're trying to raise versus just small incremental steps. As everyone probably knows, the first check is probably 90% of the work, and after that, like things kind of get easy, and you roll on through. Yeah. Okay, last question. I know you've got to get going. The valuation cap is, you know, moving and increasing. You're adjusting that as you go. The amount you're raising with each safe, do you go out with, you know, this is $1 million raise on a 5 million cap, and then the next one's a $5 million raise on a whatever million? I mean, is the amount just stepping up each time as well, or what? Last question. The amount needn't step up. The amount could be again, like I would keep the amount as small as possible. Like obviously a function of the kind of checks that you're raising. Like typically if you're raising from angel investors, you're raising anything from 25K checks to 250K checks, maybe an occasional 500K check. So I would keep it like somewhere where it it's like there's not a ton of friction to get the first check in. Like $1 million and you're raising 25K checks, the first 25K is going to feel that person is going to feel quite alone in the round. So maybe you want to start off a little bit small and then increase as you need to, but always have a clear plan for the company. Like, okay, here's where the company is today. Here's your plan for where you want to be for your next equity raise. And have a clear articulation of what you are going to spend the money on, like in terms of investing in growth.
Okay, very last question is a 5-second question. The whole amount you've raised, how many different safes was that? Just so we can kind of understand like what this looks like, if you're able to say.
I think maybe around 7 tranches. I'm not sure. So
okay, interesting. Yeah. Okay, very good. I'll let you go. So if people want to learn more, it's simply Turing.com. That's TURING.com. Correct? Anything you want to plug or promote here in the last 30 seconds?
I mean, if you're looking for Silicon Valley caliber remote developers for a fraction of the cost of hiring locally in the Bay Area, if you think it's really costly and hard to hire engineers, if you don't want to go head to head with Google, Facebook, Apple, Amazon, etc. for engineers, then you should check out Turing.com. You can sign up. You can send me an email at jonathan@turing.com, and I can connect you with our team. At the end of the day, if you're building a startup, your goal should be to ship product fast so that you don't miss a market window, and you can get to your next milestone. So Turing can help you with that.
Beautiful. Great conclusion. Thank you, Jonathan. Much appreciated. Have a great rest of your day and a happy Thanksgiving and holiday season. Thank you.
Sounds good. Thank you,
Bye.
Nathan. Bye-bye.